to figure out how to put food on the table for their kids, be able to have a little bit of breathing room, being able to make sure that they go to bed not staring at the ceiling like my dad did, wondering whether, since he didn't have health insurance, what happens if mom gets sick or he got sick. These are basic things, basic things. And I'm of the view that the vast majority of people, including registered Republicans by and large, share that same view, that same sense of what is, what's appropriate. Justin Sink, Bloomberg.
Thanks, Mr. President. I wanted to ask about your relationship with China now that you've been in office for a couple months. There's obviously the meeting in Alaska that was a little theatrical, and there's the continued human rights abuses. So today, I'm wondering, are you more likely than you were when you came into office to maintain tariffs on China? Are you considering banning imports of forced labor products? And would you consider cutting off U.S. investment or Chinese access to international payment systems?
Well, look, they're each specifically legitimate questions, but they only touch a smidgen of what the relationship with China really is about. I've known Xi Jinping for a long time. Allegedly, by the time I left office as vice president, I had spent more time with Xi Jinping than any world leader had, because President Obama and the Chinese President Hu decided we should get to know one another, since it was inappropriate for the President of the United States to spend time with the Vice President of another country. But it was obvious he was going to become the new leader of China. So I spent hours upon hours with him alone with an interpreter, my interpreter and his, going into great detail. He's very, very straightforward. Doesn't have a Democratic with a small d bone in his body, but he's a smart guy. He's one of the guys like Putin who thinks that autocracy is the wave of the future. Democracy can't function in an ever complex world. So when I was elected and he called to congratulate me, I think to the surprise of the China experts who were his people on the call as well as mine listening, we had a 2-hour conversation for 2 hours. And we made several things clear to one another. I made it clear to him again, what I've told him in person on several occasions, that we're not looking for confrontation, although we know there will be steep competition. 2, that we'll have strong competition, but we'll insist that China play by the international rules. Fair competition, fair practices, fair trade. Thirdly, in order to compete effectively, I indicated that we're going to deal with China effectively. And we're going to need 3 things to do that. I'm telling our people. First, we're going to invest in American workers and American science. I said that all through the campaign. I say it again, and I'm setting up my administration to be able to do that, which is that, back in the 60s, we used to invest a little over 2% of our entire GDP in pure research and investment in science. Today, it's 0.7%. I'm going to change that. We're going to change that. The future lies in who can, in fact, own the future as it relates to technology, quantum computing, a whole range of things, including in medical fields. And so what I'm going to do is make sure we invest closer to 2%. One of the reasons why I've set up the PAB, the President's Board with Scientists and the like, again, is we're going to invest in medical research, cancer, Alzheimer's, diabetes, the things, industries of the future, artificial intelligence, quantum computing, biotech, and we're going to make real investments. China is out investing us by a long shot because their plan is to own that future. The second thing we're going to do is we're going to reestablish our alliances, and I've been very clear with him. It's not anti-Chinese, and we've talked about it. I want to make sure that, for example, later today, after this, as a matter of fact, shortly after this, which is fine, we've been going close to an hour. I'm happy to go longer, but one of the things that I'm going to be doing, I'm going to be speaking with 27 heads of state in Europe. And very shortly, I think within the next hour or so, I don't know the exact time. And earlier this month, and apparently it got the Chinese attention, that's not why I did it, I met with our allies and how we're going to hold China accountable in the region. Australia, India, Japan, and the United States, the so-called Quad. Because we have to have democracies working together. Before too long, I'm going to invite an alliance of democracies to come here to discuss the future. And so we're going to make it clear that in order to deal with these things, we are going to hold China accountable to follow the rules. Whether it relates to the South China Sea or the North China Sea or the agreement made on Taiwan or a whole range of other things. And the third thing, and the thing that I admire about dealing with Xi is he understands, he makes no pretense about not understanding what I'm saying any more than I do him. I pointed out to him, no leader can be sustained in his position or her position unless they represent the values of the country. And I said, Mr. President, as I've told you before, Americans value the notion of freedom. America values human rights. We don't always live up to our expectations, but it's a value system. We are founded on that principle. And as long as you and your country continues to so blatantly violate human rights, we are going to continue in an unrelenting way to call to the attention of the world and make it clear what's happening. And he understood that and made it clear that no American president, at least one did, but no American president ever backed down from speaking out of what's happening in the Uyghurs, what's happening in Hong Kong, what's happening in country. That's who we are. The moment a president walks away from that, as the last one did, is the moment we begin to lose our legitimacy around the world. It's who we are. So I see stiff competition with China. China has an overall goal, and I don't criticize them for the goal, but they have an overall goal to become the leading country in the world, the wealthiest country in the world, and the most powerful country in the world. That's not going to happen on my watch, because the United States is going to continue to grow and expand.
All right, just to follow up on the meeting of democracies, is that where you expect in a multilateral way to make these decisions about sanctions or
No, that's not where I make the decision. That's where I make sure we're all on the same page. All on the same page. Look, I predict to you, your children or grandchildren are going to be doing their doctoral thesis on the issue of who succeeded, autocracy or democracy. Because that is what is at stake. Not just with China. Look around the world. We're in the midst of a fourth industrial revolution of enormous consequence. Will there be middle class? How will people adjust to these significant changes in science and technology, the environment? How will they do that? And our democracy is equipped because all the people get to speak, to compete. It is clear, absolutely clear, and most of the scholars I dealt with at Penn agree with me around the country, that this is a battle between the utility of democracies in the 21st century and autocracies. If you notice, you don't have Russia talking about communism anymore. It's about an autocracy. Demand decisions made by a leader of a country. That's what's at stake here. We got to prove democracy works.
Mr. President, sorry, I know you haven't had a chance to address the tragedies in Georgia and Colorado. You had said to stay tuned for actions that you might take on gun control. Wondering if you've made a decision either about sending the manufacturer liability bill that you had promised on day one to Capitol Hill, or executive actions like going after ghost guns or giving money to cities and states to battle gun control.
All the above. It's a matter of timing. As you've all observed, successful presidents, better than me, have been successful in large part because they know how to time what they're doing, order it, decide in priorities what needs to be done. The next major initiative is, and I'll be announcing it Friday in Pittsburgh in detail, is to rebuild the infrastructure, both physical and technological infrastructure of this country, so that we can compete and create significant numbers of really good paying jobs. Really good paying jobs. And some of you who have been around long enough to know that used to be a great Republican goal and initiative. I still think the majority of the American people don't like the fact that we are now ranked, 85th in the world in infrastructure. I mean, look, the future rests on whether or not we have the best airports that can accommodate air travel, ports that you can get in and out of quickly, so businesses decide. Some of you, if you were ever local reporters, and you found your governor or mayor trying to attract business to your community, what's the first thing the business asked? What's the closest access to an interstate highway? How far am I from freight rail? Is the water available? Is enough water available for me to conduct my business? All the things that relate to infrastructure. We have somewhere, I asked the staff to write it down for me, and they did, not for this, but for a longer discussion. We have somewhere in terms of infrastructure, we rank 13th globally in infrastructure. China is investing 3 times more in infrastructure than the United States is. Bridges, more than 1/3 of our bridges, 231,000 of them, need repairs. Some are physical safety risks or preservation work. 1 in 5 miles of our highways and major roads are in poor condition. That's 186,000 miles of highway. Aviation, 20% of all flights weren't on time, resulting in 1.5 million hours lost in production. 6 to 10 million homes in America still have lead pipes servicing their water lines. We have over 100,000 wellheads that are not capped, leaking methane. What are we doing? And by the way, we can put as many pipe fitters and miners on us to work capping those wells at the same price that they would charge to dig those wells. So I just find it frustrating. You talk about, last point I'll make in the infrastructure, and I apologize for spending more time on it, but is that if you think about it, it's the place where we will be able to significantly increase American productivity, at the same time providing really good jobs for people. But we can't build back to what they used to be. We have to build, the global warming's already done significant damage. The roads that used to be above the water level didn't have to worry about where the drainage ditch was. Now you got to rebuild them 3 feet higher, because it's not going to go back to what it was before. It'll only get worse unless we stop it. There's so much we can do. Look at all the schools in America. Most of you live in the Washington area now, but in your hometowns, I don't know where you're all from. How many schools where the kids can't drink the water out of the fountain? How many schools are still in a position where there's asbestos? How many schools in America we're sending our kids to don't have adequate ventilation? How many homes, buildings, office complexes are wasting billions of barrels of oil over time because they can't hold in the heat or the air conditioning, because it's leaks through the windows that are so porous in the connections? It's amazing. So there's so much we can do that's good stuff, makes people healthier, and creates good jobs. And I think that I got one more question here. And Janet from Univision.
Thank you, Mr. President. We too have been reporting at the border, and just like Cecilia, we ran into a pair of siblings who came in on Monday, were detained by CBP, had the phone number for their mother who lives in the U.S. We have contacted the mother. That's the only way they know her kids are here, because CBP today, Thursday, has not contacted that mother. So when can we expect your promise of things getting better with contacting and expediting?
Well, they're already getting better, but they're going to get real. They're going to a whole hell of a lot better real quicker. We're going to hear some people leaving. Okay? We can get this done. We're going to get it done. I had a long meeting with the entire team and several cabinet level officers the other night. We're going to be moving within the next week over 100,000. I mean, 1,000 people out of the Border Patrol into safe, secure beds and facilities. We're going to significantly ramp up. We're already out there contacting everyone from getting some of the employees at HHS. There's a lot of them doing other things and move them into making those calls. We're in the process of rearranging and providing for the personnel needed to get that done. But I admire the fact that you were down there, you're making the calls yourself. It's real. The next thing that has to happen, though, as you well know, has to happen. There have to be some certitude that this is actually mom, dad, or whomever. And there's ways to do that. There's ways to do that, a little bit like determining whether or not you got the right code for your credit card. You know, what was your dog's name, kind of thing. I'm being a bit facetious, but not really. And also seeking harder data from DNA to birth certificates, which takes longer. So I want to do this as quickly, as humanly possible, and as safely as possible.
As you well know, treating the root causes in Latin America doesn't change things overnight. How do you realistically and physically keep these families from coming to the U.S. when things will not get better in their countries right away?
Well, I can't guarantee that, but I know, you know, that old thing, the journey of 1,000 miles starts with the first step. You know as well as I do. You cover it. You have serious, it's not like somebody's sitting on a hand-hewn table in Guatemala, in somewhere in Mexico or in Guadalupe saying, I got a great idea. Let's sell everything we have, give it to a coyote, have them take our kids across the border into the desert where they don't speak the language. Won't that be fun? Let's go. That's not how it happens. People don't want to leave. When my great-grandfather got in a coffin ship in the Irish Sea, expectation was he going to live long enough on that ship to get to the United States of America? But they left because of what the Brits had been doing. They were in real trouble. They didn't want to leave, but they had no choice. So I can't guarantee we're going to solve everything, but I can guarantee we can make everything better. We can make it better. We can change the lives of so many people. And the other thing I want to point out to you, and I hope you point out, I realize it's much more heart-wrenching, and it is, to deal with a 5- and 6- and 7-year-old. But you went down there and you saw the vast majority of these children, 70% are 16 years old, 17 years old, and mostly males. Doesn't make it good, bad, or indifferent. But the idea that we have tens of thousands of kids in these god-awful facilities that are really little babies crying all night, that's true. That's why we got to act. And yesterday, I asked my team, both the director of the two agencies as well as others, I asked them what would they in fact, and I asked their opinion because they're the experts, but I said, focus on the most vulnerable immediately. But there's no reason why in the next month as people cross the border, that phone call can't be made in the first 48 hours and begin.
If I may ask one last question, have you had any talks with Senate Republicans who are threatening this administration with not considering the immigration legislation that was passed in the House until the situation at the border has been resolved?
No, because I know they have to posture for a while. They sort of got to get out of their system. This is but I'm ready to work with any Republican who wants to help solve the problem or make the situation better. But folks, I'm going. Thank you very, very much. I appreciate it. Thank you.
It's like my dad when he was tired. Folks, I'm going. That's
I'm
President
done.
Biden. Yes, indeed. I'm done. I've done it. Just about an hour. From start
To the
to
minute
finish.
almost.
Exactly. And then, of course, was President Biden, his first official press conference as president. And starting 60 minutes ago, Tim, starting off with the vaccine specifically and talking about a new goal of up to 200 million shots coming out in the first 100 days.
Yeah, doubling. Remember, the first 100 days, his goal initially was 100 million shots. As he mentioned, the U.S. reached that last week. He now wants to double that to 200 million. He said it wouldn't be easy. He also made some news talking about his reelection and saying that his plan is to seek reelection in 2024 and that his plan is to have Vice President Harris on the ticket.
Yeah, which is really interesting. That's what we call a red sticky. I'm Carol Master, of course, with Tim Stanovic. This is Bloomberg Business Week on this Thursday, March 25th. There's a lot going on, a lot of it coming out of the nation's capital. And as we just mentioned, President Biden just wrapping up his first official press conference as president specifically. And we just talked about some of the headlines, talking about the vaccine, talking about the filibuster being used in a gigantic way, talking about Afghanistan, talking about, in a big way, too, I should say, what's happening at the U.S.-Mexican border.
Yeah, a lot of the questions, including the last one that he got from Univision, focused on what the U.S. is doing at the border. As we know, Vice President Kamala Harris has become the point person on working on the border on behalf of the Biden administration. The other part of this, too, was infrastructure. A lot of questions, or more, I should say, a lot of focus from his side on infrastructure. And as our live blog points out, this is one issue that does have bipartisan support. So it makes sense that the president would focus on talking as much about his infrastructure plan as possible.
Has had bipartisan support for several years, and yet we haven't moved that much ahead. So
Yeah.
we'll see whether or not he can. And again, I really feel like, as Tim, as you mentioned, the big headline, President Biden says he plans to seek re-election in 2024. All right, some of those headlines from that press conference. Let's check in, though, on the world of business and a check on that trading day. Let's get over to Charlie.
Hi, thank you very much. And here's what's going on, Carol and Tim. Fast-moving markets, right to the numbers. Big swings, choppy session. The Dow Jones Industrial Average, I'm calling it unchanged. At one point, though, the Dow had been down 348 points, down 1.1%, but right now is showing a gain of less than half a point. The S&P is down 7. That is a drop right now of 0.2%. Have been down as many as 35 points, down 0.9, while NASDAQ remains lower, down 102 points, down 0.8%. Should point out that NASDAQ is now trading negative on the year, down 0.2%. 10-year yield 1.61%. We have got gold down $5 the ounce, down 0.3%, $17.29 the ounce, and crude a retreat there, down 4.4%, $58.40 a barrel on WTI. Oil turning lower after yesterday's rally, spurred by by the blockage of the Suez Canal. Boeing's plan to resume delivery of its 787 Dreamliners, lifting the plane maker. We've got Boeing shares up by 1.4%. After earnings, KB Home up 0.2%. RH, the old restoration hardware, up by 3.9%. Again, recapping, S&P 500 index down 8. Investors weighing the outlook for vaccinations, economic growth, and inflation. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Well, we just wrapped up the first official press conference of the Biden administration by the president himself. Let's break it down with Jordan Fabian, Bloomberg News White House correspondent, on the phone in the nation's capital. Jordan, good to have you here. Tim and I were marveling that it looks like to the T, 60 minutes.
That's right. Biden keeping the schedule and also mostly keeping on talking points, not veering too far away from everything you said before when it comes to the pandemic and to the situation at the southern border and also his policy toward China. So not many surprises from the president, but as you pointed out earlier, he did make some news by saying that he does plan to run for re-election in 2024.
Any other headlines sticking out to you?
Wait. How surprised were you by that?
I mean, I'm not that surprised. I'm not
You were
surprised.
not surprised?
No.
Ah.
I mean, I thought he would say that.
Yeah.
Yeah, what about you, Jordan?
Yeah, this is Joe Biden. He doesn't shy away from the back and forth with reporters, so I wasn't totally surprised that he decided to answer that question. And look, for Democrats, too, politically, they want to know sooner rather than later who they're going to have on the ticket in 2024 so they can start preparing to keep control of the White House.
So what about other headlines that stuck out to you from the press conference? You mentioned that he did largely stick to his talking points, apart from what's going to happen on the ticket in 2024, what the plan is, and then the 200 million shots. What else stuck out to you?
He really got a ton of questions about his handling of the situation at the southern border, and essentially his response was, look, I'm trying my best, but it's going to take time. So it's a suggestion that this issue could continue to nag him in the coming weeks, even as he tries to keep the focus on his effort to combat the pandemic and also get this infrastructure package passed. This is going to be an issue that he continues to get asked about.
Yeah, I do think it's interesting. We knew that from the get-go that Joe Biden and his administration, right, Jordan, were going to be all about the virus and COVID and getting under control. And listen, anybody we talk to, whether it's in the corporate community or elsewhere, says we don't have anything unless we get this under control. So that was from the get-go. But he had to know, the back of his mind, he had to know that the border was going to be a big issue and come up pretty quickly.
Yeah, although it is kind of remarkable there weren't any questions at all about the pandemic or vaccinations or anything like that. It was very focused on the border. There were, again, questions on China. Our colleague Justin Sink asked the president whether he's how is his approach on tariffs, whether he would remove Trump-era tariffs on China, whether he would block their access to international payment systems if they continue with human rights abuses. And Biden, again, pretty much stuck to his talking points. Said that he would continue to press the Chinese on open navigation of the South China Sea, human rights in Xinjiang. But he did say that he's going to convene some allies at the White House, at least in the coming weeks or so, to try to discuss this issue. So that was a piece of news on the China front. And so we'll be asking for more details about what that meeting might look like.
Jordan, I don't want to get too inside baseball here when it comes to this, but a big part of this press conference was the fact that there was a press conference in itself, and that it has taken relatively long for Biden to give a press conference in the first few months of his presidency. Was it a mistake for him, based on the reporting that you've done and who you've spoken to? Do people think it was a mistake for him to wait so long to do this?
Yeah, it was a little baffling on, why they waited so long, and then they made such a big deal about it, announcing this press conference more than a week in advance. The president took 10 questions from 10 reporters, I should say, and he acquitted himself fairly well as far as staying on message. He didn't really make any of those Biden-esque gaffes that you might expect. And also, at certain points, he seemed very, pretty clear and was giving direct answers and just seemed a little more lively at certain points in this press conference than he does at some of these very highly scripted events that the White House has for him, where he's reading off of the teleprompter. So maybe this will show them that they shouldn't be afraid to put him on camera more in the future.
Because already there's stuff flying out in the world of social media about some of his pausing and, trying to get back on track and I guess looking to who he's going to speak to. Somebody said to me, this isn't though what he normally does a lot of. Like, this is not necessarily maybe something he enjoys doing. Is there any background we should know about that?
No, actually, I do think he relishes some of the back and forth with reporters. I mean, sometimes he seems a little prickly when he doesn't like a question, but I do think he kind of relishes that, and I think it's evidenced by the length of some of the answers that he gave, especially on China and immigration. You really want to explain his thinking and also rebut some of the notions of the questions that the reporters were facing. So again, I don't think it's a sign that he doesn't like it, but it was a sign that he actually does like it.
All right, good stuff. Hey, Jordan, thank you so much. Jordan Fabian, Bloomberg News White House correspondent on the phone from Washington, D.C. Want to do the bite of the day?
Let's do the bite of the day. The Bloomberg Business Week bite of the day is one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
Well, today's number is 419 billion. Americans caught the DIY bug during the pandemic. Total spending on home improvement and repairs climbed an estimated 3% last year to $419 billion. This coming from research over at Harvard. The composition of the spending changed markedly as remodeling shifted away from the coast to less expensive areas where younger households could afford to own homes. I mean, you go to Home Depot and stuff. I mean, stuff's just flying off the shelves.
My DIY throughout the pandemic was much less about being proactive and more about being reactive.
Like something's
fixing
broken.
things, exactly.
I love that. I love that. All right, listen, we've got a great show coming up. We've got the CEO of KB Home. We're also going to hear from Dawn Fitzpatrick. She's the Chief Investment Officer of Soros Fund Management. That's among our most read. The cover story about the world's golden ticket, a vaccine passport.
Yeah, we're talking all about that. In the meantime, let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. Well, President Biden may be 78 years old, but he has no plans to fade into the sunset after his first term.
My plan is to run for re-election. That's my expectation.
And when Biden was asked about GOP efforts to put new restrictions on voting, he did not mince words.
What I'm worried about is how un-American this whole initiative is. It's sick. It's sick. Deciding in some states that you cannot bring water to people standing in line, waiting to vote.
Biden says what Republicans are doing makes Jim Crow look like Jim Eagle, and it must not succeed. Biden's comments came during his first news conference since becoming president. He also touched on immigration and the pandemic. The 21-year-old man suspected of gunning down 10 people in a Boulder, Colorado supermarket made his first court appearance today. Ahmad Alisa hardly spoke in the 5-minute proceeding, but Judge Thomas Mulvihill did advise him of his rights and told him he'd be staying in jail for the time being.
You'll be held without bail until such time as the court is able to determine whether or not the proof is evident and the presumption is great that you committed these crimes.
Mulvihill granted a defense request that Alisa undergo a mental health assessment. The suspect faces 10 counts of murder for the deadly shootings on Monday. The bright lights of Broadway could be turned back on this fall. New York Mayor Bill de Blasio says the city is taking steps to make it happen, including setting up a vaccination site dedicated to just theater workers. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. So this is among our most read stories on the Bloomberg terminal on this Thursday, and it talks about Ken Griffin, of Citadel Securities. And it says in the early days of the pandemic, Ken Griffin talked with President Trump and VP Mike Pence about stimulus and fast-tracking COVID therapies. And now he's apparently saying he sees an opening to work with the Biden administration to address a year of lost learning.
Yeah, it's a fantastic piece by our own Amanda Gordon. Griffin saying, quote, "The political party doesn't matter to me, though Amanda notes that Griffin contributed $66 million to Republicans in the last election. He says what matters is the receptivity of solving problems.
Listen, I love Amanda and her reporting, and she just gets access to these guys and asks them all kinds of kind of real world questions like, what has your year been like? And he says he's been, pretty busy over the last 15 months. They're a hedge fund, of course. They're a market maker, Citadel Securities. So both parts of his business successfully navigating the volatility that we've seen over the past year. But he also said he was acutely aware of the, quote, existential and economic threat posed by the pandemic early on after hearing from their own employees in China.
Yeah, and he actually worked hard to get his colleague's family out of Wuhan. It got Griffin on the phone with then Secretary of State Mike Pompeo, and he actually wired several $1 million that paid for 4 planes carrying more than 800 people out of the country.
That's pretty remarkable, right? And so he says, learning that they had safely landed in America, there's something so tangible about that. And he said, by the way, he and his partners, they've donated about $45 million in COVID-related aid. So interesting.
Yeah, he still is undecided about what he's going to do with his fortune. He's donated $1.25 billion over his lifetime. He does plan to give billions more to higher education, but he's not necessarily making big bets on philanthropy, instead looking to make a difference right here, right now.
Well, listen, and he also says, over the past 15 months, sometimes he got some different calls from help. He says in mid-March of last year, he listened while a former Citadel partner who's now NYU Langone CFO talked about facing some problems at the hospital.
Well, 1 million. 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 1 milli
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelita. Volatile day on Wall Street. Last update I told you the Dow was unchanged. Right now, the Dow is surging 105 points, up 0.3%. S&P now higher by 9. That is a gain of 0.3%. Turnaround from our last update. NASDAQ lower by 20 points. A drop for the NASDAQ Composite Index, lower now by 0.2%. Choppy session as investors weigh the outlook for vaccinations, economic growth, and inflation. Oil is tumbling after a rally spurred by the blockage of the Suez Canal. Yesterday, oil up. Today, lower, now down by 4.4%. Talking about West Texas Intermediate crude, WTI at $58.51 a barrel. Brent crude down 3.9%, $61.89 for a barrel of Brent. 10-year yield 1.61%. Gold is down $4.60 the ounce at $17.30. A drop there of just about 0.3%. Nike falling on concern that it is risking a boycott in China. Nike shares, they're trading lower now by 4.1%. And Rite Aid shares are plunging today, down now by 19.9% after the drugstore chain warned that its full-year results would be worse than expected, in part due to disappointing winter sales. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. So this week's Bloomberg Business Week cover story, it's a business takeover about vaccine passports, which could not only help global tourism, but also some other industries as well. In fact, every industry is safe to say. Here's more with Bloomberg Business Week Assistant Managing Editor Jim Ellis.
So we've heard so much about, the pain that businesses have had and that countries have had, particularly tourist-dependent countries, since the pandemic has pretty much stopped the ability to sort of easily move between places or even to congregating groups. So I thought it would be a great idea to sort of take a long look, a deep dive at, the problem and also the range of solutions that are coming out now, and whether this vaccine passport, this sort of mythical savior that so many people have been talking about, is really going to be as effective and as easy to put together as a lot of people seem to think. I mean, this is one of those things that this is a solution that people came up with quite quickly before actually understanding what it means.
Right.
So
it's like really,
take a look at that.
Really, will it be the golden ticket? And you guys take us to Israel, you take us to Europe, where I feel like this is where we're starting to see kind of moves in that direction, at least more ahead than some other parts of the world.
Yeah, they've been very, very much more interested in getting things reopened in a coordinated way than here in the U.S. for a lot of reasons. I mean, in some ways it's simpler because their health systems sort of centralize a lot of data, and so therefore here in the U.S. we've got a health system where millions of different systems in every state, and so it's sort of hard to be able to track people. It's easier in countries that have their own health systems. But more importantly, certain parts of the world are so impacted by the drop in travel that they have an interest in getting this back together, particularly Europe. Europe has a lot of countries, particularly in southern Europe, like Greece or Spain or in Italy, that desperately need tourism to come back. It's a big piece of their GDP, and they want some reason to say that it's safe to travel. Whether it's truly safe or whether that's just a fig leaf, it seems more and more businesses, whether it's an airline, whether it's in the hospitality business, but increasingly, whether it's in things like sporting events, gyms, all those are looking to a vaccine passport as a way to say, hey, it's safe. Here's your get-out-of-jail card. You have this. Now let's get back to business as usual.
All right, so let's talk about some of the things that are out there. There's the International Air Transport Association. They've got a travel pass app. You've got the EU with their digital green pass proposal. You've got the AOK pass. Any of this really working well, or at least maybe some tests of it?
Well, yeah, the things are in tests. The issue is that there's right now no coherent standard about what these things should, sort of what kind of data they should capture and how they should be able to sort of share that data, and what do you have to do to make sure that that data is sort of private, because it's often tied to other data, other health data on you, and other sort of just personal information on you, which is a really big issue in parts of the world, particularly in Europe, where privacy is a major concern over everything. And so you've got a lot of competing systems as opposed to a standard, whether it's, right now, Air France is trialing something called an AOK pass. IATA, has its travel pass, the Common Pass, which is something that's backed by the World Economic Forum. All of these are basically competing systems that, in various ways, take your vaccination and COVID testing history and put it into a form that can somehow be displayed on a screen. The problem is that how that happens can really affect how private the data is. So increasingly what we're seeing is people are coalescing around sort of an open standard that's tied in with the way that we look at security on the World Wide Web, which is pretty well adopted around the world. And the key here is, rather than having a central database that has everyone in the world's health data, which is something that most people would not want.
I'm just going to say, you made me really nervous. Like, I think about, it's like similar to what we're trying to do with, medical history. Every time I go to the doctor's office, I'm frustrated that I filed something out, but will I be ultimately comfortable if there is some universal database that knows everything medically on me?
Particularly since this database is, some people would say that's cool if it's just to transport, to transit borders or something like that, where government is involved. But increasingly, this is going to be used. I mean, Britain is arguing now about whether this can be, whether a vaccine passport can be used for admissions to pubs. And in other places, I mean, Hyatt earlier this month said that it would consider using one of these apps, exploring using one of these apps to determine whether you should be able to attend a meeting or a convention at one of its hotels.
Right.
So, I mean, a lot of people are worried about that leaking out. So what the standard that seems to be emerging will be something that actually allows the data from your sort of health center or your health tester to somehow go into a secure app within your phone.
Right.
And then you can decide what piece of it you want to put out. And so therefore the border guard or the bartender or whatever wouldn't have access to all of your information, just what little piece you determine that they can have from the phone at that time. And that the user, the person whose data this is, would always be in control. If they can make that work, and they think that they can use web protocols to do that, then that may be a solution.
Vaccine passport?
Yes for me.
Yes for you.
Yeah, look, it is so tricky, and I hesitate to be totally willing to give up my information, but we are really in unprecedented times right now. It's so sticky because, and we talked about this on Quick Take yesterday, there are so many issues with this, so many issues when it comes to equal access to vaccines.
Yeah.
But I don't know. I say yes, but I'm also on the fence.
I don't know. I feel like there's so much already information we put out there. Is it just so bad to just say, okay, yeah, I've got the vaccine? Is it as simple as that? And it's just, some universal system that really makes it possible for us to start moving around.
I mean, my wife went and got her first dose this week, and she got a sticker that said that she got vaccinated.
She's feeling probably kind of good.
Not like she goes outside and wears it around, right? It's not like we're going anywhere right now.
Well, that, of course, was Bloomberg Businessweek Assistant Managing Editor Jim Ellis, just really breaking down. He oversaw the coverage. Be sure to check out the Vaccine Passport issue of the magazine. It's on newsstands now at Bloomberg.com/Businessweek, and, of course, on the Bloomberg Terminal, all of those stories. Really a thoughtful deep dive into the possibility of vaccine passports. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Businessweek, Tim and I, we're going to be back. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. We covered the president out of the nation's capital. I hear there is something else going on.
Oh, is there?
Yeah.
Does it involve tech CEOs and being grilled on Capitol Hill?
Yes, grilled again.
Yeah, again and again and again.
And it ain't over. All right, we're going to cover that big time, do a deep dive. That's coming up on Bloomberg Businessweek. This is Bloomberg.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Thursday, March 25th. Stocks are trading at session highs right now, with the Dow, the S&P, NASDAQ reversing earlier losses. At one point, the Dow was down 348 points, down 1.1%. Right now, the Dow is up 125 points, up by 0.4%. S&P up 15, higher by 0.4. NASDAQ wiping out earlier losses, up now by 12, higher by 0.1%. The NASDAQ 100 index is flat on the day. 10-year yield 1.61%. Gold is down 0.2%, 17.31 the ounce. And oil lower after a rally spurred by that blockage of the Suez Canal. Day 3, we've got Texas Intermediate crude down 4.4%, 58.47 a barrel. Brent, the global benchmark, down 4.1%, 61.81 a barrel. As for the market backdrop, Seema Shah is chief strategist at Principal Global Investors, and on Bloomberg Television and Radio this morning, she told us no question there is plenty of pent-up demand.
I think there is actually some surprise yet to come on the upside, and I think, if we just even turn our minds back to about 2 or 3 months ago, there was still a general view that some of the cruise liners would never get back up on ship. Where would the demand realistically come from? And what we're hearing more and more is that people are just desperate to go out and do the stuff that they were not able to do. So I think there could be certainly some upside surprises to come.
She mentioned the cruise lines. They are up today. Carnival, for example, up 3.3%. Royal Caribbean up 1.9%. Norwegian Cruise Line Holdings up by 1.9%. 2 of the world's largest container carriers say they are considering sending ships around Africa to avoid the Suez Canal, amid warnings that it could take days or weeks to release a stuck container ship. Right now, we have got the S&P up 15, higher by 0.4%. Recapping the numbers here, 10-year yield 1.61%. I'm Charlie Pellet, and that's a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so we are glued to our live blog that is all about 3 well-known tech CEOs testifying up on Capitol Hill. We're talking about CEO Mark Zuckerberg, Google CEO Sundar Pichai, and Twitter CEO Jack Dorsey testifying right now before the House Energy and Commerce Committee. The committee, Tim, is called Disinformation Nation, Social Media's Role in Promoting Extremism and Misinformation. Take that, you 3 tech CEOs.
I'm starting to see a pattern here.
All right, let's get into it. What's the pattern?
That these guys get grilled all the time by members of the House
Never
and Senate.
warm and fuzzy and cozy when they're up there. Let's get into it with Sarah Roberts, Assistant Professor of Information Studies at UCLA, Graduate School of Education and Information Studies, author of Behind the Screen, Content Moderation in the Shadows of Social Media. She's with us from LA on the phone. John Ehrlichman, anchor of BNN Bloomberg's The Open, correspondent for CTV National News, on the phone from Toronto. A great twosome to be talking to. Sarah, let me kick it off with you. This hearing, what's the problem? Who needs to be really accountable? How do you see it? You understand this world.
Yeah, thanks for having me to discuss. I think one of the big takeaways that I had very early on in this hearing today, which is, as we acknowledge, one in a series. We seem to be seeing these guys being paraded before Congress now with fair amount of regularity. One of the things that I was noting today was that there really are conversations happening by our Congress members at a number of different registers with regard to their complaints and their questioning to the CEOs. We have some members of Congress who are representing their constituents and talking about individual perceptions of bias towards them based on perhaps political or religious orientation or creed or practice. We have other members of Congress talking about much larger issues such as the Rohingya genocide in Myanmar that seems to have been orchestrated and carried out through people communicating on Facebook. That's fairly well known at this point. And then we have even members of Congress bringing issues like multilateral trade agreements into the conversation, trade agreements notorious for their secrecy, and it comes to be the case that Section 230 like language is being built into them. So in a way, although I'm not known for my great sympathy towards the tech firms, I do have to say that it's quite a feat for them to respond to all of these different registers. The problems they're being asked to respond to are just coming at them from all different directions, and there's not a lot of cohesion from our Congress members. It's just as a constituent, I find that a little disappointing because it really does derail in some ways the kinds of complexities that could be gotten into. Of course, we know that there's a lot of grandstanding that goes on with these things, and a lot of just yes or no, answer the question to prove a point. So we got to take that political theater into the equation too.
Right, and that happens every time, as we've seen time and time again. I should note that, as planned, the committee is recessing for 15 minutes right now. John Ehrlichman, come on in here and talk a little bit about the lawmakers and their lines of questioning here, because a common criticism over the past few years when it comes to the way that these members of Congress do speak to these CEOs has been that it's not always clear that they know exactly what they're talking about. Do they seem, quote unquote, read in on this?
Yeah, it's a great question, Tim. And I'll be honest, after listening to so many of these grill sessions, and I totally see where Sarah's coming from. It's true. They have thrown out a whole bunch of stuff, and maybe the net result is you don't get as far as you need to get with what ultimately the goal may have been with today. But at the same time, this has been some of the most compelling testimony that I've observed, partly because at the very least, I have walked away so far feeling as if we have moved beyond whether we actually, understand the business. Just watching everything, it felt to me like I don't need to know if this lawmaker understands everything that goes into the business of Facebook or Google. There's a robust conversation around whether or not these massive platforms should have the power to ignore or police their content that for years they said we don't create, so we're not responsible for. And now they are saying we have or we want to implement better ways to police the content. And to Sarah's point, they have come to the table with a lot of great examples. Some are anecdotal. Maybe it's one politician whose posts were taken down, or maybe it's something else. But we've gotten to a point where things can be toxic as a result of what happens on these platforms. They've done a lot of exciting things. The technology has allowed us to do a lot. But I would have hoped that these executives were in many ways more prepared. And so now headlines are coming out because there are sort of specific examples used, like the Capitol riots, right? Some of the lawmakers were asking, yes or no, do you bear responsibility for this? And there's sort of these stuttering answers, and Jack Dorsey walks away as the one who acknowledges, okay, yes, Twitter did play a role in that. And I think that the line of questioning, although scattered, is actually far more improved from when this process began.
Accountability, yes or no, Sarah? I'm pretending I'm one of the lawmakers. But do they ultimately need to be, Sarah, accountable for the content? I think this is what we're trying to figure out. Are they accountable? Should they be accountable? And we've only got about 40 seconds, and then we'll come back and talk some more.
Yeah, I'll tell you that that normative question is a bit of a misnomer because the fact is that they are already accountable. They're just accountable to themselves. So it's not as if we're going from no kind of remediation and accountability. It's just that the public, and now we see both sides of the aisle very much united in this hearing with anger towards these firms.
Well, or does it need to be accountability to an outside entity and not just internally? Guys, hang on for a second because we do have to do a little bit of news, but we'll come back and continue with Sarah Roberts over at UCLA. She's an assistant professor of information studies at their Graduate School of Education Information Studies. And of course, our own John Ehrlichman, anchor of BNN Bloomberg's The Open, correspondent for CTV National News, has followed the tech world for years. As you said, they're in a recess, but you do wonder, ultimately, how are these? Are they social platforms? Are they places for conversations? Are they news entities? How do you see them?
Well, they don't want to say that they're media companies because then they're responsible in a different way.
Right, exactly. But they get a lot of eyeballs getting their news from those social platforms. Let's get on over to World and National News. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Biden says the vast majority of unaccompanied children crossing the U.S.-Mexican border come with a phone number of a relative. He says those numbers are now being called.
We've set up a system now where within 24 hours there's a phone call made as that child crosses the border. And then a verification system being put in place as of today to determine quickly whether or not that is a trafficker being called or that is actually a mom, a dad, and or a close relative.
Biden, during his first news conference, added, aside from those unaccompanied children, most of those crossing the border are being sent back. American workers are making less money than the government says they are. Bloomberg's Nathan Hager has more on new private analysis.
An analysis from the Ludwig Institute for Shared Economic Prosperity shows U.S. workers earned a median weekly wage close to $800, or about $41,000 a year. That is 19% below the official estimates from the Bureau of Labor Statistics, which is the widely used measure of pay. The study also shows a wider earnings disparity by race than traditional data. White workers' wages rose 16% in the past 2 decades, while black Americans experienced a more tepid, almost 8% advance. In Washington, I'm Nathan Hager, Bloomberg Radio.
Final election results show Israel in political deadlock once again, with Prime Minister Benjamin Netanyahu and his opponents falling short of a governing majority. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Hey, Nance. Thank you so much. Carol Masser, Tim Stanovic in our Interactive Broker studio. A couple stories when it comes to SPACs. I mean, there's one almost every day at least. But there's a couple of them. First and foremost, when this crossed the Bloomberg, definitely caught my attention. It is about the SEC, the Securities and Exchange Commission. They've started an inquiry, Tim, into the blank check company Frenzy, known as SPACs, that's gripping Wall Street. It's seeking information on how underwriters are managing the risks involved. This is coming from Reuters.
Yeah, the inquiry is asking for voluntary information that isn't at the level of a formal investigation. The SEC, though, seeking information on deal fees, volumes, and internal controls to police deals, asking questions on compliance and reporting, again, according to Reuters.
Right, and I guess the concerns by regulators are centering around due diligence, heightened risk of insider trading when a SPAC goes public and when it announces an acquisition target, at least according to Reuters reporting. Listen, I'm not surprised. It's in the past 12 months, more than 700 SPACs, mostly backed by billionaires, business titans, private equity, venture capital, and even corporations, and a bunch of celebrities have flocked to New York exchanges seeking to raise about $227 billion.
U.S. regulators even recently warned against buying stakes in SPACs based solely on endorsements from Hollywood actors, professional athletes, and other celebrities without singling anyone out specifically.
It's like, buy this vitamin because I use it.
Yeah, I mean, that's...
Do your research.
Advertising, exactly.
Exactly. In terms of the SPAC world, this also caught our attention. There's a Bill Gates-backed SPAC, a developer actually of medical robot technology. It's called Vicarious Surgical. And as I said, backed by Bill Gates, of course, co-founder of Microsoft, in talks to go public through a merger with blank check firm D8 Holdings. This is according to those in the know.
The companies are discussing a deal that values the combined entity at about $1.1 billion. That's according to a person who asked not to be identified because the talks are private. The company's based in Charlestown, I should say, and it's co-founded it was co-founded back in 2014, and it does minimally invasive surgery using proprietary human-like surgical robots and virtual reality.
Yeah, so interesting, but there's a lot going on in the world of SPACs, no doubt about it. All right, you're listening to Bloomberg Radio.
stocks, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Best level of the day right now for the U.S. stock market. What a turnaround. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks now trading higher after a rough start. Dow's currently up 190 points. S&P's gained 21. NASDAQ is higher by 24. The U.S. 10 yield at 1.61%. Small caps gained 25 points. Gold is down 5, and transports jump 193. Among the main 11 S&P sectors, leaders were the industrials and materials. Only energy and telecom fell. And leaders to the upside in the Dow, American Express and Boeing, while Nike fell 3.5% and led to the downside. After earnings, RH rose 7.6%. And in deal news, Apollo is said to weigh a $6 billion sale of McGraw-Hill. In other news, Vizio opened at $17.50. IPO was priced at $21, and Boeing is poised to resume 787 jet deliveries as soon as this week. Wrapping things up, Progress Software reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, let's get right back to our discussion. We're talking about the three big tech CEOs, Mark Zuckerberg, Sundar Pichai, and Jack Dorsey up on Capitol Hill. Right now they're taking a little bit of a recess, but they are testifying about really disinformation on their platform. Sarah Roberts is still with us, Associate Professor of Information Studies at UCLA Graduate School of Education and Information Studies, and also still with us. She's from LA. John Ehrlichman on the phone in Toronto. He's anchor of BNN Bloomberg's The Open, correspondent for CTV National News. Sarah, I just want to quickly follow up. I was talking about, you said there is accountability, but do we need to have more outside accountability of these social media platforms in order for it to be better, and especially in terms of the spread of disinformation? Just quickly.
Yes, absolutely we do. And, I made the point somewhat facetiously to illustrate the fact that what we have right now is a case of the foxes guarding the hen house, and that doesn't usually turn out so well for the hens. It's just not a good model, and moreover, many other industries don't seem to enjoy this kind of leeway that has led to these firms becoming the behemoths that they are. Early on in the hearing, Zuckerberg pointed and gestured at his firm's development of their Facebook Oversight Board as a mechanism they are using once again to put a check on their decision-making power. And that board is designed as a separate entity and a body that is wholly independent from Facebook. But the thing is, it's still inside of Facebook's logic, and it still doesn't carry the same kind of weight and power that something like governmental regulation might or should, and certainly does in the context of other industries. Broadcasting comes to mind as just one, as we speak on the radio today.
Hey, John, come on in here and talk a little bit about this from the investor and business perspective here. I'm looking at a chart of Facebook intraday. It's down 0.4%. Twitter is down about 0.8%, and Alphabet is higher by just 0.2%. From a business perspective, from an investor perspective, what is the worst case scenario for these companies when it comes to regulation?
And it happens. I mean, the reality, Tim, is that this hearing today, I think we started this conversation by saying a lot has been thrown out. The biggest question becomes what can tangibly come from this. So if there was something truly meaningful that did come, well, that would definitely change the game. But I want to be clear that Facebook itself is being proactive in wanting to, have a new version of the script, because that way they can essentially, have a way to not just manage how things are playing out in Washington, but on Wall Street, with their messaging to investors. The numbers are pretty astounding, Tim and Carol. I mean, Facebook's going to generate more than $100 billion in revenue this year for the first time. It will have done that in 17 years. That's faster than Microsoft, Amazon, Walmart, GM, Chevron, AT&T. And, it comes back to the fact that they're used by everybody, and they have this massive ad business. You know, there was an interesting moment when Mark Zuckerberg was asked about advertising targeting those under the age of 13 on Instagram, at which point he said, well, people under 13 aren't allowed on Instagram. And
but come on.
Well, exactly, and so the lawmaker asked, well, okay, how do you verify that? And well, you enter your age, and so I think there was.
Oh, come on, John.
but Zuckerberg, what he talked about really for the first time was that they're thinking of an Instagram for people who are under the age of 13, so they can further police it. So they've got a business plan for everything. And I got to tell you guys, to answer Tim's question, I mean, investors have loved this story. That is the reality. Making money attracts people who want to make money.
So what does that mean then, John, from the investor world, just quickly?
And I don't really think, unless there are real teeth in what lawmakers are going to do, and I don't think we know that right now, that Facebook is still in a power position along with Google.
Yeah, exactly. And they've gotten smarter in terms of lobbying and spending a lot more money, just like companies that have been around for 100 years. Sarah, realistically, we've just got about a minute and a half left here. I mean, realistically, is this just grandstanding? We'll have these hearings and then we're going to move on and nothing really changes?
Well, you set it up perfectly for me to spike it over the net. I was reading a report yesterday about the biggest players in the government relations, aka lobbying scene, in terms of dollars and boots on the ground in places like DC. Guess who's leading that race right now? If you guessed Facebook, you'd be right. If you guessed Amazon, you'd be right too. They're number 2. And of course, we're not talking about them today, but they're in the background here as well. So, the question remains, beyond these kinds of hearings that are a lot of political theater, we have to see what will actually shake out in the form of legislation. But it's important to know that lawmakers often know where the bread is buttered, right? And these lobbyists are there to remind them. So the money piece, following the money, is going to be important. And I also have to say, just as an industry watcher, I just checked in with the trading and stock prices just before I got on the call. And as we all know, these firms have their shares trading at darn near 52-week highs, in some cases all-time highs for a firm like Twitter, which was languishing and lingering in these like really low places. It's way, up many, many times.
Hey guys, Sarah, we got to run. This is great, and I know we'll come back to this, no doubt about it, over the next few months. Sarah Roberts, Associate Professor of Information Studies at UCLA Graduate School of Education and Information Studies. John Ehrlichman, anchor of BNN Bloomberg's The Open, correspondent for CTV National News. Guys, thank you so much. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, so we've got a little bit of a rally underway. We're near our highs of the session, so I do wonder whether the chart of the day is going to be one that's going to say things are looking up, bullish for stocks, or things might be pulling back.
I got a little preview of it.
Oh, you did?
Yeah, I'm excited about it. A little bit of Warren Buffett in there.
Ooh, okay, looking forward to that. Dave Wilson coming our way in just a second. Right now, let's get another check on your top business stories, an update on that rally, I guess you could say, Charlie Ballard.
Indeed, and I'm looking at those meme stocks, and I'm sure you guys have been checking those out too. GameStop, right to the numbers. GME on the ticker, up 49% right now. Another Reddit favorite. AMC Entertainment surging 25%. And look at Costcorp, up today by 51.4%. Quite the turnaround on Wall Street. At one point today, we did have stocks trading decidedly lower, with the Dow down 348, down 1.1%. But the Dow now up by 200 points. Best level of the day, up 0.6%. S&P up 23, up by 0.6. NASDAQ now up 26, higher by 0.2%. NASDAQ for the year up by 0.8%. It had moved negative earlier in the trading session. 10-year yield 1.62%. Gold is down 0.4%. 17.27 the ounce. And West Texas Intermediate crude lower now by 4.6%. Oil tumbling after yesterday's rally, spurred by the blockage of the Suez Canal. So again, the Dow, the S&P, and NASDAQ all advancing. Banks and transportation companies leading today's gains in the S&P 500 as investors weigh the outlook for vaccinations, economic growth, and inflation. Denmark is extending its suspension of AstraZeneca's COVID-19 vaccine for another 3 weeks amid concerns it might be linked. Shares today among some of the vaccine stocks trading higher. The ADR is up by 1.8%. Researchers, meanwhile, are sifting through data on the efficacy of single shots in people who've had prior infections. Dr. Jason Farley is a nursing professor at Johns Hopkins Bloomberg School of Public Health, and he was interviewed this morning on Bloomberg Radio and Television.
Patients who've had prior infection who receive a single dose of vaccine have now been followed to determine whether or not that single dose produces antibodies similar to or equal or more than the both doses of a vaccine. And what we found is that after you've been infected, a single dose of vaccine may lead to antibody titers as high as the second dose of the vaccine. So that's good news as well.
An antibody titer, by the way, is a type of blood test that determines levels of antibodies. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the other vaccine names, Pfizer shares up by 0.4%, BioNTech up by 1.5%, Moderna up by 1%, Johnson & Johnson down less than 0.1%. Recapping, we've got a rally on Wall Street. S&P up now by 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
Was really into it. Steve Miller Band. Great music. Really great music.
Yeah.
Did you guess?
I didn't guess.
You cheated.
No, I didn't cheat. I didn't even look.
Oh, okay.
Yeah.
Jet Airliner? Yeah. What's the album? Wasn't there one? He had a couple of albums, right?
Yeah. I mean, mid-'70s were all about Steve Miller Band. No question.
Totally, right? The Joker. Oh, yeah, I'm looking at Fly Like an Eagle. Yeah, oh my God. Okay. Taking me back, Dave Wilson. So take me back, Warren Buffett and some of the investments he made in airlines.
Yeah, absolutely. I mean, I saw this chart on Twitter a week ago from the folks at U.S. Global Investors. They run a fund that focuses on airlines, and they pointed out that, if you looked at American and Delta and Southwest and United, that they basically doubled since Warren Buffett's Berkshire Hathaway sold its shares in May of last year. Well, that kind of got my attention, if only as a reminder, because Buffett, right, he has this reputation as a patient investor. We said that his favorite holding period is forever. Then there was this other quote I ran across. Now, it's always hard to kind of know exactly what he said and what he didn't say, but here's the comment that he is quoted as saying: "The stock market is a device for transferring money from the impatient to the patient." And when you look at the chart of the 4 airline stocks that Berkshire started buying back in 2016, you got to wonder if that's really an example of what he's talking about. But in this case, Berkshire being impatient. Here's why I point this out. Last May, we found out when Berkshire had their annual meeting, Buffett said that, the company had sold all of its shares in American and Delta and Southwest and United. Here's the thing, though. With that gain that I mentioned, the stock's basically doubling on average, you now have 3 out of the 4 higher than the prices where they were at when Berkshire started buying back in 2016. The only exception is American, and by the way, that stock is headed for its biggest quarterly gain since the end of 2014. A feat that Delta managed to accomplish in the fourth quarter. And when you look at Southwest and United, they're headed for their sharpest gains since the last quarter of 2016. Again, right around the time when Buffett was building his stakes. So, patience would have been perhaps a virtue in this case. Now, I acknowledge that, hindsight is always 20/20 on these things, but it's a matter of sort of comparing the reputation with the reality when it comes to Warren Buffett and Berkshire Hathaway. So if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
The only thing I would say, Dave, is, and I'm just kind of pulling up some charts, if you take a look, and I'm going to pull up Delta right now as well, but if you look at American Airlines, it looks like it popped up when maybe the news of Buffett's buying into it. It was pretty high for a long time, and then it's really started to go down even pre-pandemic. So it depends on when he got out of it. When did he get out of it?
Yeah, I mean, we found out he was out by May of last year, but it was a process that really kind of played out pretty quickly. So, it's not like what happened in the fourth quarter of 2020.
So May of 20.
Well, yeah, I mean, really, in his mind, the pandemic sort of changed everything for the airline industry.
Yeah.
But, in this case, even if that was still his argument, if he had kind of waited for the fallout, then maybe at the very least, he would have saved Berkshire from some losses.
Do what I say, not what I do.
Hey, you can't win them all, okay?
I know. Don't be so hard on the guy.
Yeah, I mean, clearly he's an investing legend. This isn't going to do too much to tarnish that, but it's just a noteworthy sort of turn of events.
Yeah, exactly. All right, Dave, thanks so much. We'll see you a little bit later on. Let's get over to World and National News with Nancy Lyons. Hey, Nance.
Hey, Carol. Among the revelations in President Biden's first news conference since taking office is that he plans to run again in 2024 with Kamala Harris as his running mate. He scoffed when someone asked if former President Trump would be his opponent. Sticking on the subject of elections, Biden condemned Republicans for their latest efforts to restrict voting rights, calling it sick.
I'm convinced that we'll be able to stop this because it is the most pernicious thing. This makes Jim Crow look like Jim Eagle. I mean, this is gigantic, what they're trying to do, and it cannot be sustained.
Biden also says his administration is working to correct the situation at the border. And after negotiations, he expects Mexico will be taking back many of the migrants. Transportation Secretary Pete Buttigieg is making the argument to lawmakers that more money needs to be funneled into the nation's infrastructure. He says we are losing the edge against our competitors.
We see other countries pulling ahead of us, with consequences for strategic and economic competition. By some measures, China spends more on infrastructure every year than the U.S. and Europe combined.
While speaking before the House Transportation and Infrastructure Committee, Buttigieg said the U.S. is facing $1 trillion backlog of infrastructure projects. President Biden is considering as much as $3 trillion worth of measures and a long-term economic program to address issues like infrastructure and climate change. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, show of hands. All right, I can't see you on radio. But listen, show of hands in the studio, in the control room. How many people were looking for Clorox wipes?
Okay, I was looking for any type. Yeah.
Got
everyone's
Sarah
raising
in there.
their hand, right?
Were you looking for
Yeah.
Clorox wipes? Yep, Marufal. Okay, they all were.
And
I mean,
guess what?
everybody was.
I found some.
Yeah.
I found some, and I hoarded some.
You did?
Yeah, just two containers.
We made our own out of like handy wipes and Clorox bleach because we couldn't find any.
I'm grateful to be talking about a time when I'm no longer like scrounging for Clorox wipes and toilet paper.
No, we laugh, but listen, it was so in demand, certainly during the past year, during the pandemic. Wipes were at the center of the boom. The U.S. category leader with about 50% of the market share. Then you've got Lysol wipes, a distant second. We're talking about Clorox wipes, and our team here at Bloomberg, including Gerald Porter, put out a story because they caught up with the CEO of Clorox.
Look, the big question that investors have is to what extent does Clorox continue the run that it's had? As Gerald Porter Jr. writes, the pandemic moment is fading. Frenetic sales gains are over. Clorox's stock will languish again. That's what the doubters are saying.
Stock was up 31% last year in 2020 when everybody and anybody, would do anything to get their hands on Clorox wipes. Stock's down about 5% so far this year. The CEO, she's newly minted. She's the company's youngest ever leader, first woman in the role. She's been at the consumer products giant, though, for almost 2 decades. And she says, listen, this behavior is sticky, but she is doing all she can to prove investors that, listen, this is going to stick around. I do think a certain amount of cleaning paranoia will stick around with people for a while, but I don't know that it will be at the level that we saw over the last year.
Yeah, I agree with that. And I got to tell you, Clorox, even though it's known as Clorox and the bleach and wipe maker, its portfolio spans pool cleaners, pet odor eaters. Let's talk more numbers here. Revenue had been eking out low single-digit gains, jumped 23% to $7.5 billion last year.
Wow. Yeah. So listen, they're making lots of things. But listen, this has been certainly the Clorox wipes specifically really caught the eyes of investors because it was so in demand. So we'll see how this year plays out. You're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Best level of the day from Bloomberg World Headquarters. I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Stocks are climbing. Oil is falling amid that Suez block. Equities gaining as investors weigh the outlook for vaccinations, economic growth, and inflation. Oil retreating after yesterday's surge. Let's begin with West Texas Intermediate crude. WTI down 4.4%, 58.49 a barrel. Brent, the global benchmark, down 4%, 61.84. 10-year yield 1.62%. Gold is down $7 the ounce at 17.26. Equities higher, rebounding across the board. The Dow at one point was down almost 350 points. Right now, the Dow is up 216, up by 0.7%. S&P up 25, higher by 0.7%. NASDAQ, which had turned negative briefly on the year, up now by 43 points today, higher by 0.3%, bringing its year-to-date gain now to 0.9%. So again, recapping here, we've got stocks pushing higher. Rite Aid, though, is plunging. Rite Aid shares down now by 19.6%. The drugstore chain warning that its full-year results will be worse than expected, in part due to disappointing winter sales. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. Well, it's been a little over a year since the COVID-19 pandemic disrupted our lives. Every day at this time, we're taking a look at different industries or ways of life that underwent monumental change in the past 12 months. Here with today's installment of A Year Like No Other is Bloomberg's Janet Wu.
More people at home meant more people cooking at home, especially as restaurants shut down. But kitchen appliances, from dishwashers to cooktops, were suddenly unavailable.
If you're shopping for anything that's got a global supply chain, you're having problems.
Steve Scheinkoff, the CEO of Yale Appliance, he says the shortages affected all lines, all brands, and all products as factories around the world slowed down or shut down. The shortages were difficult for people needing to replace broken appliances and homeowners looking to renovate during the pandemic. People went into limbo, waiting indefinitely for those appliances. The delays continue.
I don't think you're going to see much of improvement until COVID evaporates from places like Mexico and the southern United States, where all the appliances are manufactured. So I think we're in for a tough pull here.
One of the most difficult shortages in a year like no other. I'm Janet Wu, Bloomberg Radio.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 9 minutes left in today's trading session. Let's get to the drive to the close. Bill Smead back with us, CEO, CIO at Smead Capital Management, based in Seattle, but on the phone in Phoenix, Arizona. The Smead Value Fund, by the way, beating just about all of its peers so far this year and really over the past 5 years, returning on average more than 14% annually. Hey, Bill, good to have you here with Tim and me. How are you?
Very well, thank you.
So how do you see the market environment right now?
Well, it's very interesting, as always. That's one of the beauties of having this as an occupation. You have what is likely a bear market developing in the NASDAQ. At the same time, you have bull markets in the things that benefit the most from reopening. And it's harder to understand if you're in a place that hasn't reopened. I'm in Phoenix, Arizona, and this town is almost completely open. There were 138 cases in the state of Arizona recorded today, and that's down from 10,000 or something like that. Not very long ago, and so watching the activity of people here is a nice picture of what it will look like once the combination of vaccinated plus already had the virus reaches that 60-70% level.
So, Bill, a bear market for the NASDAQ. What about value and where you see opportunity? What are some names?
Well, we like the home builders. There's a line of logic out there that says, gee, because home building's gone so well that it has to be some kind of a top or a cyclical high. And we have a chart that shows the number of homes built each year divided by population going back 62 years.
Yeah.
And the current home building level just gets us up to the deepest recession levels of the 60s, 70s, 80s, 90s, and 2000s. So basically, we're just still about the third or fourth inning of a 9-inning housing recovery that should stretch the next decade. So we like Lennar, we like D.R. Horton, and we own NVR. And what everyone is kind of forgetting is that the market share of these companies has grown immensely. We have one chart that shows that D.R. Horton, the largest home builder, had 1% market share in 1994, and they have about 9% market share this year. So we have a lot of houses to build, and those houses are going to predominantly be built by the 10 largest home builders, and we own 3 of the top 5.
Hey, Bill, we got Jeff Mesger, the CEO of KB Home, joining us later in the show, in the next hour. What would you ask him?
I don't think we need to ask him a lot. We've been listening to Stuart Miller and speaking regularly and understanding their industry. KB is, I believe, a big California builder.
Correct.
And that's problematic because California is a weird state for a couple of reasons. One, my cousin helped create Proposition 13 a long time ago, which caps people's property taxes at the price they bought the home at. And so people that are in their home never want to leave them because they never want to have to pay higher property taxes. And then secondarily, there's not a lot of land left in the most attractive cities like San Francisco, Los Angeles, San Diego, et cetera. Therefore, it's just not that great a place to build homes unless you move quite a ways away. And they're doing that, I'm sure. But the big opportunity really is going to 75% of the geography of the United States where you can build homes for half the price of what you can build them in California.
Well, and do you think working from home and, all of these stories about people and companies now saying, listen, you don't have to work at our offices. You can work anywhere you want in the country. Do you think that's going to create some housing booms elsewhere and some opportunities in terms of home building in other markets?
Well, I do, but I think the offices will move to the less expensive areas also to accommodate that. And I'm actually in the camp that thinks work from home is overrated. A good friend of mine ran a successful business for a long time. He said, it's not what's expected that gets done, it's what's inspected.
Interesting.
And it's hard to inspect what your employees are doing when you're not around them.
I'm in your camp. Okay, not necessarily because I don't trust my colleagues, but I just like to be at work rather than at home.
It's good from a social standpoint, certainly.
Listen, just got about 30 seconds left there. Any other names that you think are on your radar right now or that you've committed new money? Just got to be really quick if you could.
We think that people around the country that haven't opened up yet are going to be shocked at the number of people that go to Class A malls like Macerich and Simon.
Malls, shopping.
Wow. People want to get back to it.
Haven't done that in years. Good stuff. Bill, thank you so much. Stay well. Bill Smead, he is CEO and CIO at Smead Capital Management. As I mentioned, their value fund has been beating almost all of its peers consistently over the past 5 years, joining us on the phone in Phoenix. Stick around, everyone. 3 minutes, roughly, away from the closing bell. We'll count you down, bring you those closing numbers right here on Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelota. Late day surge, folks from Vizio, ringing that closing bell. First day out for Vizio. Shares lower today. Vizio shares tumbling by 8.3%. But equities gained across the board. What a turnaround. Worst level of the day. We had the Dow down 348 points. End of the day with a 200-point gain, up 0.6%. S&P up 20 at the close, up 0.5%. NASDAQ up 15, a gain there of 0.1%. 10-year yield 1.62%. Banks and transportation companies led gains in the S&P 500 index. As for the market backdrop, Bill Smead is Chief Investment Officer at Smead Capital Management. He was our guest moments ago right here on Bloomberg Business Week.
You have what is likely a bear market developing in the NASDAQ. At the same time, you have bull markets in the things that benefit the most from reopening. And it's harder to understand if you're in a place that hasn't reopened.
He's talking to us from Phoenix, which he says reopened and is booming. Oil tumbling after a rally spurred by the blockage of the Suez Canal. That rally yesterday. Today, West Texas Intermediate crude down 4.6%, 58.38 a barrel. The Reddit names soared today. GameStop among those names, surging 53%. AMC Entertainment up 21%. Costs up 57.1%. After earnings today, KB Home shares up 2.3%. RH rallied 9.1%. Nike lower on concern it might be risking a boycott in China. Today we saw Nike shares down by 3.4%. Again, recapping, equities higher across the board. S&P up 20, a gain of 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Wild thing, think you move me. I got a few moves I know you'll like. Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaken, not stirring.
On Bloomberg Radio.
All right, wrapping up the Thursday trade. Charlie, of course, bringing you those closing numbers among the S&P Dow and the NASDAQ, finishing just off their highs of the session, but we definitely did see a leg up. You know, kind of after the 2 p.m. hour, we hit a little bit of a, not quite an intraday low, but nonetheless, we did pop off of some of those lower levels. So up 200 points, as Charlie mentioned, on the Dow, and the NASDAQ up about 16 points there. Percentage-wise, kind of small movers. If I look at the S&P 500, though, kind of an all-in risk-on trade here by the close. 407 names, Tim, in the S&P 500. Higher today, 95. Lower 3 unchanged.
Yeah, we're seeing that certainly reflected in the Bloomberg industry groups. Taking a deeper dive into the S&P 500, financials leading the pack higher by 1.6%, industrials higher by just the same, materials higher by 1.4%. Though there were 2 sectors that lagged, communication services down by 0.3%, and information technology in the red, pretty much flat, down about 0.1%.
All right, so let's bring in Bloomberg Markets senior editor Mike Regan joining us on the phone right now. Mike, what stood out for you today?
Carol, it's one of those days. It's kind of unsatisfying, but you can't really pull sort of one event that turn the sentiment around in the middle of the day and cause us to go higher. Point out, if you look at the stocks that are leading, the sectors that are leading, it's very indicative of sort of the reopening trade. Your industrials, raw materials, those type of stocks. Your tech, your communications, your stay-at-home stocks. On the other end, not doing as well, really underperforming. And I think it's kind of just a preponderance of all the news today. If I had to really, gun to my head, pick out sort of the most bullish.
People are tired, Mike. I think that's what it is. We're all just tired.
I think so.
No, it feels like
Thursday.
Right. It's like, okay, we go down, and then it's like, okay, well, let's come up a little bit. I don't know. I feel like we're kind of trying to figure out what's next in terms of the economy, in terms of rates. It's just kind of where we go from here, despite all the conversations of people saying it's going to be a better second half. You've gotten tons of reassurances from both the Fed chief and it seems like even Janet Yellen about like rates are going to be okay, blah, blah, blah. I I keep doing that and I shouldn't do blah, blah, blah. But I mean, these are important things, but I think we're trying to figure out as an investor, what is it? And do I need to be worried about maybe another wave when it comes to COVID, Tim?
Yeah, I think look, we talked to Bill Smead and he said, hey, things are pretty good in Arizona, and you'd be surprised at how many people are going out and actually doing things, and that's what he thinks is going to happen. Hey, Mike, I'm wondering, Carol referenced the leg up that the S&P 500 took really late in the day. Was there anything specific that happened before the 3 o'clock hour that really caused this late day rally?
Not necessarily, Tim. I do think the remarks from President Biden might have helped to some degree. The goal of getting 200 million vaccinations out there in his first 100 days of office is kind of obviously a bullish thing for the reopening theme in the market. That he's willing to set that sort of ambitious time. To go back to your point, though, and Carol's point, though, it's such uncharted waters. We've never been through this type of pandemic together. And the way the market is set up now, it's not only set up for strong growth and a big snapback in the economy and earnings, but it's almost set up for people expecting that to be even better than what all the analysts and economists are estimating. I think there's a really price into the market, this really optimistic sense that this economy and earnings are going to come back. So even some little setbacks, if Germany shuts down or, here in New Jersey, they kind of halted the reopening to some degree. Those little setbacks can mean a lot, I think.
Right.
We get it through a day like today and not major setbacks. I think it's enough to sort of get that risk tolerance back in motion.
Yeah, and we definitely saw it. All right, Mike, thanks so much. Bloomberg Markets senior editor Mike Regan joining us there on, I'm assuming it was a cell phone.
Yeah, well, I think earlier this week you told him you wanted to get him a satellite dish, right? So he could get the connection better.
Is that satellite dish
not
going
on
out
its
to
way?
Mike? Not on its way, huh? Let's call Amazon. Let's get it there. Interesting day. And you know what? One thing I did want to take a quick look at is some of the social media companies that have been up on Capitol Hill, specifically the testimony continuing. Jack Dorsey, Sundar Pichai, and of course, Mark Zuckerberg. Right now, Twitter shares, they're down about 1.4%.
Yeah, Twitter shares are lower. Facebook shares lower too, down by 1.2%. And shares of Alphabet finishing the day pretty much flat.
Pretty much flat. So no surprise, this isn't the first time that they've been hauled in front of members of Congress to answer questions about their platforms, and I'm sure it won't be the last. But nonetheless, we'll continue to monitor it. They're back, I believe, the questioning is continuing. All right, you're listening to Bloomberg Business Week. Carol Master, Tim Stanovic, and this is Bloomberg Radio.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson!
Hey, Mr. Wilson, give us your stock of the day.
That would be OI Glass, Tim. It's a maker of glass bottles and jars. The company was founded as Owens, Illinois in 1929 and adopted its current name in 2019 after a reorganization. The ticker stayed the same. It's OI. Now, OI Glass shares set a record back in 2008. Last March, they reached the lowest price since October 2001. While the shares more than tripled in the past year, that wasn't enough to satisfy the guardians of S&P's U.S. stock indexes. They're moving OI to the S&P Small Cap 600 index from the Mid Cap 400 effective Tuesday. Now, the change was attributed to OI's market value, which closed yesterday at about $1.9 billion. Data compiled by Bloomberg shows its weight in the Mid Cap 400 as of yesterday was only 1/100% of a percent. Now, OI's share of the Small Cap 600 will be much higher, somewhere around 0.2%. That means index tracking funds will have to own a lot more stock than they do now, and that prospect helped send OI to its biggest gain in a year. The shares climbed more than 17%.
So just being switched because within that small cap 600 index in the S&P, as you said, it's a higher percentage in terms of the index. So that's why. And you're going to have those index fund managers, right, just buying it up.
Yep, and assuming you have anything like the amount of money tracking the small cap 600 that you do in the mid cap 400, the benefits really go to OI.
That market cap now $2.2 billion.
Yeah.
After today's game,
Yeah.
there you go.
Good stock. Love it. All right, Dave, thank you so much. Let's get another check on world and national news over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol, President Biden says the influx of migrants at the southern border is not unique to his presidency and says this time in 2019, immigration was up 31%. He also slammed the Trump administration for dismantling funding for housing and resources at the border.
What did Trump do? He eliminated that funding. He didn't use it. He didn't do it. And in addition to that, what he did, he dismantled all the elements that exist to deal with what had been a problem and has been continued to be a problem for a long time.
Biden says he's working with Mexico to have it accept more of the thousands of migrant families who've been crossing the border. Chief executives at Facebook, Twitter, and Google fended off a torrent of criticism from both Democrats and Republicans at a virtual House hearing into the provision of the law that protects them from being responsible for content. Bloomberg's Irv Chapman with more.
Democrats saw the social media as a hotbed of misinformation and disinformation, some of which nourished the attack on the U.S. Capitol. Facebook's Mark Zuckerberg came prepared with a response.
Before January 6th, we worked with law enforcement to identify and address threats. During and after the attack, we provided extensive support in identifying the insurrectionists and removed posts supporting violence. We didn't catch everything, and when we feared that he would incite further violence, we suspended the former president's account.
Republicans accused the platforms of censoring conservative content and driving teenage users to depression and suicide. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. So I've been surveying our team here about what your favorite Broadway show is and trying to get everybody to sing a line. Sarah says it's Hamilton. I don't know. Paul didn't weigh in if he's got a favorite show.
Paul, we're waiting.
Paul, favorite Broadway show? Grease.
Oh, nice.
Grease. Marufal, got a favorite Broadway show? No, Marufal's busy. Do you have a favorite Broadway show?
Let's see. Angels in America was awesome.
They're making that into a movie, aren't they? No, Avenue B.
Okay.
Sorry, wrong thing.
Yeah, so that's probably the last one that I saw.
Can you sing a song from Broadway?
No. I mean, yes, I could.
A little New York, New York? Come on.
No.
Darn it.
Well, only during the breaks, Carol, when the microphone light is not red.
He did a little New York, New York. I'm just going to say it in the break. So New York City taking steps so that Broadway can reopen safely in September. That coming from New York City Mayor Bill de Blasio. So over the next month, the city's going to set up a vaccination site dedicated for theater workers, planning pop-up testing units near the venues, and it's developing plans to manage crowds before and after performances. That's a big deal.
You can guess what the mayor said. The show must go on. Hey, look, this is really important. Broadway in New York City is a huge driver of the economy. Huge. It attracts tourists, it attracts people, and it employs so many people. It is really important that this starts to happen again. I don't know when the right time is, and the mayor obviously thinks he knows, and that health officials know when the right time is, but it is so important for all of the above reasons. Mm-hmm. Hey, Carol, remember a year ago when they first suspended Broadway performances?
Yeah.
We thought this was going to be for a few weeks, maybe a few months. It's been more than a year.
It's really remarkable, and we have talked to head of the Broadway League over the year, and just, and she said to us, like, the math is just not there to do a partial reopening. You just can't do it easily. And listen, as a result, you talk about restaurants, the hotels, they've lost billions of dollars.
Let's talk numbers here. The theaters support 100,000 jobs and have an economic impact of $15 billion a year. That's according to the New York City Mayor's office.
Come on, Tim. New York, New York. Just a little?
No.
Oh, darn it.
That's
all right,
okay.
Folks. I'll tape it and put it out on Twitter. You're listening to Bloomberg Business Week, and this is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a headline from the Bloomberg Professional Service. Robinhood is aiming to allow users to buy into initial public offerings. This according to Reuters, but the headline worth repeating, Robinhood aiming to allow users to buy into IPOs. It was an up day on Wall Street, quite the turnaround, with equities gaining amid progress in distributing vaccines. Also, investors were weighing the outlook for economic growth and inflation. Banks and transportation companies led gains in the S&P 500 index. S&P up today by 20 points, erasing a 35-point deficit. S&P up 0.5%. The Dow Jones Industrial Average rebounded 199 points, up 0.6%. NASDAQ up 15, a gain there of 0.1%. 10-year yield 1.62%. Gold down 0.4%, 17.27 the ounce. And today we had oil tumbling after yesterday's rally, spurred by the blockage of the Suez Canal. Specialized dredging equipment has arrived on the scene. West Texas Intermediate crude down 4.5%, now 58.42 a barrel. GameStop rallied to erase its earnings-led slump as Reddit favorite stocks surged and traders touted the company's ongoing corporate transformation. GameStop up today by 52.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. So in the latest front row on the Bloomberg, the Chief Investment Officer of Soros Fund Management, we're talking about Don Fitzpatrick, spoke exclusively with Bloomberg editor-at-large Eric Schatzker. So much to talk about here. And here to tell us more is Eric. He's on the phone in New York City. And Eric, George Soros, well known to our investment audience. And Eric, he's also someone very well known to political circles. But Don Fitzpatrick, not as well known.
No, and it's important to point out that the job of managing money for George Soros, Carol, is not an easy one, right? George Soros was the greatest, arguably the greatest macro investor of all time. Some people think he's the greatest investor of all time. And so that's a tall order, you'd have to imagine. And in part as a result of that, Soros Fund Management, the organization that manages the money that he uses in his philanthropy, has churned through 9 chief investment officers. Don Fitzpatrick is the 9th. She's beaten the over-under. She's been there for 4 years. But in the space of 4 years, she has acquired a reputation as being, let's just say, less aggressive, less ambitious, less risk-taking than George Soros used to be. And that is a reputation she is very eager to change, because she believes that Soros Fund Management, with its permanent capital and its ability to do big trades, has some unique advantages that she is trying to press, and over the past year has in fact been pressing, put $4 billion to work in the March and April meltdown of 2020, right as the pandemic took hold. And over those past 12 months, she's generated returns of 30%, which may not sound all that great if you look at the stock market, or if you look at some of the best performing managers like Kathy Wood of ARK Investments. But foundations are very different. They can't take 100% equity market beta risk. They have to have a much more diversified portfolio. They have to be much more market neutral. And so in that context, 30% is actually really good.
So, Eric, what has her strategy been, especially with regard to working with or not with outside managers?
Oh, it's a good question, because, you know, when you run an organization like Soros and there is that much knowledge in-house with George and others, you have to decide, how much do I want to do internally? How much do I want to do externally? On the public side, so there are about 50-50 private markets, 50% public markets. On the public side, they're about 75% internal and 25% external. They're largely external on the private side. They do some of their own private credit investing, but to the degree that they need private equity, they outsource that almost entirely. And what they're looking for are people who have specialized skills, right? They're experts in biotech, for example. That's one area that she highlighted. Or it's a fund that puts on a lot of leverage. as she said, I'd rather have somebody else put on the leverage as opposed to me putting on the leverage, because if they do it, it's non-recourse. The banks effectively can't come after Don if the external manager is taking the risk. Of course, if things go pear-shaped, that won't make that, that investment won't make any money, but there'll be no collection agent calling.
Hey, listen, Eric, want to play a little bit of your exclusive interview, especially where, I bet it can be tricky, because I'm assuming not everybody agrees with George Soros and his political opinions. But let's play a little bit of Eric's exclusive interview with the Chief Investment Officer of Soros Fund Management, Don Fitzpatrick. Check it out.
There have been IPOs where a corporate CEO has zeroed us from the book.
Seriously?
Yeah. So that has...
On the basis of political views?
Yes. That said, I just have to believe more people than not view the work George does as a true benefit to society. And I think there are more times that it works to our advantage than to our disadvantage.
I would be remiss in not asking you to name some of those companies that have X'd you out of the allocation book.
And by the way, I would love to, but I will not. I will refrain.
Okay, so she refrained, Eric, from asking. But look, you were as surprised as I think many people were surprised to hear that, because money's money.
And this is where we are in the world, right? Political views are guiding investment decisions, business decisions. That you could argue that that's not really, in a fiduciary's interest, right? Everybody in the position of leadership managing money on behalf of shareholders should be looking to generate the maximum return. That's certainly what Don Fitzpatrick is trying to do. So I was absolutely stunned that there are CEOs who would zero out, which is to say give no IPO share allocation to an organization like Soros, which has demonstrated its ability to be a long-term holder and a very good partner.
Well, great stuff, as always. Eric, thanks so much for breaking it down with us. Our own Eric Schatzker, editor-at-large at Bloomberg News, with us there on the phone in New York. Check out his exclusive interview with the Chief Investment Officer of Soros Fund Management, Don Fitzpatrick. That entire interview, by the way, the front row with her, can be found on the Bloomberg terminal. All right, coming up, we're going to talk a little bit about housing and home building, because we've got the CEO of KB Home, came out with their earnings late after the closing bell yesterday. Stock initially saw some selling pressure, but it rallied in today's trade. So we're going to break it down with the CEO. He's joining us in just a minute. You're listening to Bloomberg Business Week. Carol Masser, Tim Stenovic, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. Shares of KB Home, they were up nearly 5% in today's session. The company reported earnings yesterday after the close. We're going to break down, the quarter, but I'm really interested in the outlook. Who is buying homes and what's the visibility? We're going to catch up with the CEO of KB Home, Jeff Metzger. He's going to be our guest in just a moment.
Yeah. Are they building Zoom rooms?
Yeah, exactly.
That's what I want to know.
I want like a workout room. I want my yoga room.
Yoga room.
Peloton room. All right, let's get a check on your top business stories. Some of the news after the close. Here is Charlie Pellet.
Thank you very much. Important story for bank investors. Major story breaking now on the Bloomberg Professional Service. Federal Reserve says banks that clear the next round of stress tests with sufficient capital will be allowed to raise their dividends after June 30th. Any ongoing restrictions on buying back stock will also be lifted for lenders that perform well in the exams. So again, repeating the headline there, dividend and buyback limits to end June 30th for most banks, that according to the Federal Reserve. It was an up day on Wall Street. In fact, quite the turnaround today. Stocks advanced. Oil fell amid that Suez block. Today we saw West Texas Intermediate crude down 4.4%, 58.47 a barrel on WTI. Brent, the global benchmark, down 4%, 61.83, but it does have shipping companies rethinking whether they're going to wait to get through the Suez or reroute around Africa. 10-year yield, 1.62%. The Dow, the S&P, NASDAQ all gaining today amid progress in distributing vaccines. Also, investors weighing the outlook for economic growth and inflation. S&P up 20, a gain of 0.5%. The Dow up 199, up 0.6. NASDAQ up 15, a gain there of 0.1%. 10-year again, 1.62%. Gold down 0.4%, 17.27 the ounce. Worth repeating, crude down 4.4%. The government has lifted its estimate of fourth quarter economic growth. Wall Street economists anticipate an even stronger showing this quarter. And with that story, here's Bloomberg's Vinny Del Giudice.
America's economy expanded at a respectable 4.3% pace, up from the prior estimate of 4.1%. Business, investment, housing, and exports led the way. Economists surveyed by Bloomberg are forecasting another respectable GDP gain this quarter, up 4.8%, as more people are vaccinated against the coronavirus. Vinny Del Giudice, Bloomberg Radio.
United Airlines Holdings says it will expand domestic flights that bypass its hub airports, bucking the traditional network strategy of big American carriers and extending a push to entice more leisure travelers as demand recovers. Among the airlines, UAL up 4.1%, American Airlines Group up 4.4%, Delta up 3.1%, rounding out the big four, Southwest up by 3.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it. And just want to go back to that headline Charlie mentioned. The Fed says dividend restrictions to end June 30th for most banks. Keep in mind that since last June, the Fed has barred Wall Street banks from increasing their dividends. It was a prohibition put in place to really ensure lenders had sufficient capital to endure any economic pain triggered by the coronavirus pandemic. Listen, we see this after a crisis. We saw certainly in the financial crisis, a lot of things change, and it was just to make sure banks basically had enough capital cash on hand, Tim.
Share buyback constraints also to cease, the central bank says, relaxing limits contingent on stress test results.
Yeah, exactly. So banks certainly going to be something we're watching into the after hours and certainly into tomorrow's trade. Quick check on JP Morgan shares. Yeah, they're up about 1% in the after hours. All right, speaking of getting checks on different sectors, we got a check on the housing sector. KB Home came out with their latest earnings. That happened just about 24 hours ago after the closing bell. Stock, and forgive me, I mentioned a price, but it was actually up 2.3% by the close today. It is up 32% here in 2021. Let's get into it in terms of what they are seeing. KB Home Chairman, President, and CEO Jeff Metzger is with us. He's on the phone in Los Angeles. Jeff, nice to have you here. How are you?
I am well, Carol. How are you?
Doing okay, surviving. You're in here. You guys had a pretty good quarter.
We did. I was joking with someone yesterday. It's a good time to be a home builder.
How good? Walk us through the metrics.
Actually, it's as strong and as good as it's ever been, Carol. Both the demand side in particular is very strong right now. Interest rates are low. We're coming out of the pandemic, and the economy's starting to percolate a little, as evidenced just by the GDP you just reported. So you have job growth, you have a better economy, people are feeling better, strong demographics, low interest rates, and no inventory out there. So it's an incredibly strong combination for us right now of solid demand and low inventory.
Well, you have homes for sale throughout the United States in 8 different states: Arizona, California, Colorado, Florida, Nevada, North Carolina, Texas, and Washington. Which market has the most opportunity? Which state has the most opportunity?
Yeah, it's odd to say this, but right now every city is performing very well. And the metrics I described of no inventory, strong demand, solid economy right now is very broad-based across our footprint.
Any concerns about California, though? And I asked this for a couple of reasons. One, I'm a Californian. We've seen so many reports, again, anecdotal reports of people leaving California for among different reasons, but also going to places where you do that are included in your markets, right? Florida, Texas. So why are you still bullish on California?
Yeah. Well, the demise of California has been predicted for about 50 years now, I think. And we're headquartered here, so it's our home state, and we enjoy the market here and the economy and what's going on. And if you look at our business, one of our indicators of future revenue is our backlog. And our backlog at the end of the quarter was up basically 100% year over year. Our backlog in California was up well over $1 billion. And it speaks to the strength of housing in that there's just a shortage of housing in this state. It's very underserved right now, and demand is good, and we're enjoying a strong market right now.
Jeff, what about a shortage of land? I mean, do you guys have enough land to meet the demand that you're seeing in terms of order flow?
We do, and it's growing right now, Carol. I used to refer to this as a supply-constrained recovery, in that coming out of the financial crisis, the issue was the industry didn't have enough approved land to develop because things had stopped. And now we're past that, and I shared on our call yesterday, in the fourth quarter, we increased our spend on land and development by 40%. Year over year, and in the first quarter again here we were up 37%. So we're actually increasing pretty significantly the investment we're making in future growth.
All right, sit tight, Jeff, for a sec. We have to do a little bit of news, but we want to definitely come back and continue with you. We're talking with Jeff Mezger. He's Chief Executive Officer at KB Home, joining us on the phone from Los Angeles. As I mentioned, we've talked a lot about certainly the housing space, the home space. Everybody has been kind of all in during the pandemic, thinking about their homes, but a lot of people moving around, buying homes during the pandemic as well.
Yeah, interest rates have been good, but they are going higher. Curious how he's thinking about interest rates, and also just about different demographics of people who are buying.
And what's the build out? Are homes going to be built differently going forward? All right, let's get to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Biden says the pace of vaccinations is picking up, and he's upping his goal since he's already met the target of 100 million shots in his first 100 days.
We met that goal last week by day 58, 42 days ahead of schedule. Now today I'm setting a second goal, and that is we will, by my 100th day in office, have administered 200 million shots in people's arms.
Biden made the declaration during his first news conference since taking office. He also addressed immigration and said he expects to run again in 2024 with running mate Kamala Harris. The federal government says it has delivered 127 million coronavirus stimulus checks, totaling $325 billion. This new batch included roughly 37 million direct payments, totaling almost $83 billion. Most of the $1,400 stimulus payments were delivered either through direct deposit, paper checks, or prepaid debit cards. The remainder will be issued in the coming weeks. The suspect in the Boulder, Colorado supermarket shootings has made his first court appearance. A timeline for proceedings was established. Ahmad Alisa faces 10 counts of murder in the attack, in which he's accused of shooting 2 people in the parking lot of King's Supers before walking into the store and killing 8 others. Boulder District Attorney Michael Dougherty says authorities are still sifting through the evidence and building their case.
We have our federal, state, and local partners working hand in hand, making sure that everything is being done so that the investigation can be completed and that the prosecution will be successful.
Doherty says the FBI is still going through the crime scene. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, thanks so much, Nancy. You're listening to Bloomberg Business Week. So there's a story.
I love this story, Carol.
Yeah, all right. Our Fabiana Batista wrote it, and it's about toilet paper, not likely victim of world's container crisis. So
next likely
it's
victim.
next
Yeah,
likely
bad
victim.
news, Carol.
Excuse me.
We're where we were a year ago.
See, this was just subliminal. Please don't make this a crisis. Because
we wish.
Actually, in our household, we were like chasing toilet paper because we
Carol,
ran out and couldn't get any.
It's
not
wild.
funny,
It's not funny. Thinking where we were a year ago. I remember hearing from a friend of mine, my neighbor below us. They were out of toilet paper, a family of 4. And I remember we had a few rolls, brought him down a roll of toilet paper. He was texting asking, couldn't we find it anywhere? No, we couldn't. And this was
nowhere. Remember those shelves? You'd go into a supermarket, you'd go anywhere, and they'd go to the paper goods, and it was just gone.
And in hindsight, it was for a couple of reasons, right? It was because people were hoarding it, but also it was because people were working from home. And there was this real shift to consumer toilet paper, which, as we learned over the last year, is a lot different from toilet paper that you find at an office.
Well, so listen to this. The biggest producer of wood pulp, the raw material for products including bath tissue, is warning that the global crunch in shipping containers could start creating supply snags. This is coming from a CEO of the largest pulp exporter. The container squeeze is spilling over into break bulk shipping.
Yeah, of course, that's happening at a time when demand for residential toilet paper has gone way up and consumers have taken to stockpiling and panic buying. I just hope this doesn't lead people to more panic buying of toilet paper.
No, right. Well, who knows? But it's like we're talking about those containers, right, that are used to ship this stuff around, and they have been in large demand by China. That's been playing out for some months, but this just has to go. We keep talking about the supply chain. The world continues to grow bigger and bigger. You have a much more developed society in what normally or were, used to be developing areas, and there's just demand for all kinds of goods.
Brazil is the world's top supplier of pulp, and Suzano accounts for about a third of global supplies of hardwood pulp. That's the type used to produce toilet papers.
This is like a Jeopardy question.
I know.
Well,
now you know the answer.
Now I know the answer. So toilet paper is next likely victim of the world's container crisis. All right, we're going to get back to the CEO of KB Home. Stick around.
stocks, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
World headquarters, I'm Charlie Pellet. The Federal Reserve says American banks that clear the next round of stress tests with sufficient capital will be allowed to raise their dividends after June 30th. It was an up day on Wall Street today. Stocks advanced amid progress in distributing vaccines. Also, investors weighed the outlook for economic growth and inflation. S&P up 20, a gain of 0.5%. The Dow was up 199 points, up 0.6%. Nasdaq up 15, higher by 0.1%. The big story, though, the turnaround in the U.S. equity market today. We saw the Dow at one point down 348 points, down 1.1%, and again, end of the session with a gain of almost 200 points. 10-year yield, 1.62%, important for the home builders. Gold lower today by 0.4%, $17.27 the ounce. West Texas Intermediate crude down 4.4%, $58.45 a barrel. GameStop surged today, erasing its earnings-led slump as Reddit-favorite stocks surged. Today, GameStop was up 52.7%. AMC Entertainment up 21.3%. Koss, the headphone company, up by 57%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Want to get right back to our conversation with the KB Home Chairman, President, and CEO, Jeff Mezger. He's still with us on the phone in Los Angeles. So, Jeff, I wish you were here because the conversation we were having kind of behind the scenes about, maybe how homes change as a result of the pandemic. Are we all going to look at them differently? Are we going to want in every home maybe a little workout space, an office, just in case?
It's a great topic right now. And in our business, Carol, we believe in personalization of the home. So when we sell a home to someone, we don't build it and then sell it. We sell it, let them personalize it in our studio, and then we build it for them. And there's a lot of flex space in the homes. And we rolled out what we called a KB Home office feature where you could convert a bedroom or a den to an office space. And we're seeing that as a pretty popular option right now, whether it's people working from home or kids schooling from home or just a new area for a family to gather. And
because you know how people like their demands, like it went from homes years ago were like just everything was its own space, and then we got to kind of open concept and lots of open space and shared space. And I just wonder, is there something that you think as a result of the pandemic is going to kind of impact housing maybe for years to come? Or maybe not?
I think homes became more valuable and appealing to people because everyone wants their own space. And we've all been spending a lot more time in our homes, so you want it to be yours. The trends we're seeing with the consumer is still great rooms. They want a lot of open space, but then they want that little dedicated enclave they can go to get away from the world as well.
Well, speaking of the world, I'm interested, Jeff, to hear where you were a year ago. We talk about it a lot because, as we say here on Bloomberg Radio, it's been a year like no other. So take me back to where you were last March when California was shut down and New York City was shut down. Did you ever foresee that you would have a 2020 and an early 2021 like this?
Absolutely not. It's been a wild ride. And as we look back on it, January and February last year, our sales were incredibly strong. We were set up on a great trajectory to have a great year. And then the pandemic was declared, and we went into bunker mode. I took some steps to protect the employees and their teams, and we actually shut our business down for about 6 weeks. Totally shut down. And when you're in that mode, it's lower overhead, hoard cash, don't buy any lots. It's going to get worse, and you plan for the worst and hope for the best. And then coming out of that, in May and June, things started to percolate, and by July or August, it was an incredible run. And we just had the quarter we just reported is our best quarter of sales in 15 years for a first quarter. So we went from getting the bunker, this is going to get very difficult, to this is an incredibly robust housing market in literally in a 9-month period. Incredible swing. But we're on the good side of the swing now.
Good side of the swing. What about as rates start to go up? And listen, we all have to remember perspective, because you go back to the early 80s and, we had mortgage rates that were off the charts. So even a few higher points from here, it's still low by historical standards. But nonetheless, it can prevent some people from maybe being able to afford a mortgage with a higher rate. So is there a certain rate that you're watching or that you're concerned that if we start to go higher?
Now, we're obviously mindful of rates, and it's a math equation. You only make so much money. You can only afford so much. So if rates go up, it squeezes affordability. Rates today are still lower than they were a year ago. They've come off the floor that they had set in January in the high 2s. We're now in the low 3s. Still an incredibly attractive rate. And I think what people lose in the affordability debate is what I touched on in our last session, in that there's incredible demand right now. The millennial generation had deferred their purchase decision for many years. Now they're out in full force, and there's 70 million millennials that want to be a homeowner today. And
see, so millennials do want to own homes, right? There
Yeah,
There was a real conversation of people saying, no, it's not going to happen.
Well, now we do.
Now.
And I think what I've seen, and correct me if I'm wrong, Jeff, is big changes over the last few years. Homeownership is coming, but it's at a later age.
Yeah, and as you look back on it, it was post-financial crisis, and they saw their parents lose their home, or they couldn't get a job, or they had high levels of student debt they had to deal with, or they deferred getting married and getting on with their life, whatever the reason was. You had a full generation that delayed their home buying decision much longer than previous generations had, and then they came out in full force. And it was actually starting, so it's what I touched on, it was starting before the pandemic hit. Then the pandemic hit, and it accelerated the desire to be a homeowner. And what we're now seeing, if you look forward, so you have 70 million millennials, incredible demand, and now the Gen Zs, the next cohort, is 80 million, and they're hitting their first-time home buyer ages now. They're at 26, 27. So you have a double generation of demand, if you will, facing us right now. So we think the rates can tick up a little, but the demand is so strong and affordability is still so good that we think our industry is going to run for a while.
Almost sounds Goldilocks. For a while, how long, and I am curious, we've just got about a minute left, how long do you think this could run, and are you worried about the supply chain shortages? I have brothers who are contractors. They talk about things that are expensive and hard to get, and then also access to workers. And just got about a minute here.
Yeah. Well, I joke about that. I'd much rather worry about those things than whether I could sell a house today. And sales are just fine. So now it's over here on the supply chain. There are cost pressures. We've been able to navigate through them, whether it's our cost containment or price lift in the markets we're in.